Hello folks, welcome back. Boston Dave here, real estate broker associate with eXp Realty, founder of Rent Smart USA Property Management. Today's topic is the Orlando Real Estate Market Report, October 2020. All that and much, much more coming up next. Thanks again for tuning into my channel, Boston DaveTv. Here we discuss the market report for the Orlando real estate market, October 2020. So many people are asking me, how long will this seller's market continue? Home prices, absolutely going crazy. Low inventory. The COVID situation. Low interest rates. Let's dive deep. Okay, let's start with home sales, up by 16%. So last month in the Orlando market, we sold 3,478 homes versus 2,989 homes sold in 2019. Again, home sales up by 16%. Median sales prices now $270,000 here in the Orlando market. And that's up by 10% from the same time last year, up by $5,000 from June. $5,000 increase since June. That's crazy. And want to hear a crazy story? I just got a crazy price for one of my investment homes that I bought in 2015 for $60,000. We closed on it the other day. We sold it for $215,000. $215,000. Absolutely incredible. Low inventory. That's really the story here. Low inventory. Down by 23% versus 2019. Down by 23%. Good news, it's up by 1% from last month. Again, historic lows here with inventory. So currently there's only 5,972 homes on the market. Clearly a seller's market. That's roughly 1.5 months inventory. A normal market is 6 months inventory. So who knows when the buyer's market will eventually come back, and it will come soon. I shall digress. That's another video. Okay, mortgage rates. This is what's really fueling, okay, the sales prices of homes going up and up and up, because there's bidding wars on each home because of the low inventory and because the mortgage rates are so low. Historic low interest rates. Right now you get a 30-year fixed rate mortgage for 2.74%. 2.74% for a 30-year fixed rate mortgage. That's actually kind of like free money. And let's compare it to last year at this time. It was 3.68%. Still very cheap money. I mean, ask your parents what they were paying for interest rates in the 70s and 80s. Now, if you're looking to do a 15-year fix, which I always encourage, right now you can get a 15-year fixed mortgage for 2.34%. That's awesome. Okay, refinancing, all-time high. So if you're looking to refinance, do it now. Okay, let's talk about average days on the market. Right now it's at 48. Last year at this time, 49. Again, for the last 5 years, we have been in such a seller's market. So generally 53, 49, 48, 47 days on the market to get a home sold. Compared to, say, 2010, 11, 12, sometimes 6 months to get a home sold. So we truly are in historic levels in regards to getting homes sold in such a fast time and for such a high price. So let's talk about the elephant in the room. And the elephant in the room is the unemployment rate. Believe it or not, in January, it was 2.3%. Unbelievable. That was historic low for unemployment here in the Orlando area. In May, it was 22. The effects of the pandemic and the shutdown, 22.7%. Today, it's 12.20%. Still, unemployment is still very high. Now, how will that affect the forbearance? How will that affect people not paying their mortgages? How will that affect foreclosures? Well, we shall see, okay? And that's another video, so stay tuned for that one. So here's the other elephant in the room. Last year, 68 million people visited Orlando. Now, because of the pandemic, it's off by 1/4. Excuse me. It's down by 75%. Okay, so we have 75% less people visiting Orlando. And that is truly, truly affecting our unemployment rate. However, yes, the bull market, the bubble, this huge bubble that we have here in Orlando for home sales keeps expanding, expanding, expanding. Every month, median sales prices continue to grow and grow and grow. Again, low inventory. There's so many buyers looking for properties. Low interest rates keeps fueling the prices up and up and up and up. So the moral of the story is, if you ask me, if you're looking to buy a home, I mean, will it appreciate over the next 12 months? Or will the bubble burst and lose 20, 30%, maybe 40%, possibly 50% like 2008 and 9, 10? We shall see. And until then, I believe over the next 12 months, our market will continue to appreciate. So if you're looking to sell your home, do it now. Seriously. And if you don't have to sell, stay in the home. Seriously. No reason to buy a home unless you really, really have to. My advice, rent a home for the next 12 months, feel out the market, see what happens. And again, if you're selling a home, I just told you the story about the property I just recently sold that I bought for $60,000 and then sold it for $215,000. I mean, that's insane. So sell if you have to. Buy if you only absolutely have to. With all that being said, appreciate you all tuning in today. If my team and I can help you in any way, please contact us. Our contact information is below. And again, if you see value in what we do on this channel, please like, share, and subscribe. Again, Boston Dave here. Until next time, peace.